Hey everyone, this is June from Turning Point Life Investment. This video, I'm going to talk a little bit about using different time frames and how you can use that to your benefit. I'm using NTAP. Now, this is by no means an analysis on this particular stock. I'm just using this stock as an example. Now, I'm looking at a 6-month daily view, meaning that each candlestick is plotted as one day. Looking at the current price action, you can see we have pretty much 7 consecutive straight up days without any consolidation or pullback whatsoever. Looking on the daily view, we noticed that the stochastic is not exactly overbought. So if you're looking at this chart, you might think, wow, this thing has gone up. Maybe I should try to catch it before it leaves or goes any higher without me. So something like this is where you want to take a look at a closer or shorter time frame so you can get a better entry rather than trying to chase something that's gone so far already. Okay, so now what I've done is I brought it into a 60-minute or an hourly view, meaning that each candlestick is 1 hour. This is the 7 straight up days. Now you can see how by bringing it into a shorter time frame, you can see the little wiggles and squiggles of each hour. You would notice that with each high and pullback, high, pullback, right? We're making higher highs and higher lows. We're getting pretty stretched out from the moving average, okay? I call that the rubber band effect, where you can only stretch so much of the moving averages before the stock has to come back towards the moving average. Stochastic is extremely overbought, okay? So you can see there. Something very important to notice also is that the MACD is divergent, meaning that as the stock goes higher and higher, the MACD, each subsequent peak, is getting lower and lower. So that's telling me that this stock, even though it's making some pretty significant strong moves towards the upside, it's showing that it's tired. It's getting a little bit tired towards the upside. So when you put all of these together, what does it say? It tells me that it's overbought, it's showing divergence or weakness, and it's also getting pretty stretched out from its moving average. And looking at the daily view, we had 7 consecutive up days without any significant pullback. So it's telling me that a pullback is due soon, whether it's tomorrow or the next couple of days. We don't really know, but I know that going long right now is probably not the best thing to do. However, now let's say if I do have position into this stock, I was lucky enough to catch it right at $18, and I'm holding all the way up here. It's telling me that right now is probably a good time to start taking some profit. Because why? You don't want to be too greedy and allow this stock to drop back down to somewhere around here, okay? Taking away some of your profit. So these indicators are more or less used as risk management, telling you, okay, right now it's getting a little bit stretched, a little bit tired towards the upside, so it's probably not the best time to go long right now. And if you are already long, right now is probably a good time to start taking some profit. So as you can see, looking at different time frames, whether it's short or long term or intermediate term, it's really helpful if you combine all 3 or all 2 different time frames to give you a better idea of what the overall picture of the stock is doing.